Good evening. It's 7:23 p.m. in Kuwait. 3 hours past the US session. Well, I'm sorry, the video is being uploaded late. But anyway, it's 2nd of June 2015. We are hitting that summer and the market may get slow as well. Summer vacation time. This is Prince, and the platform that we're trading again, as always, is MetaTrader 4. Crude oil non-expiring continuous CFDs by AvaTrade. If you don't have a demo account, if you want a practice account or a live account, click on the link below this video to get a trading account. So let's get started. Okay. Daily chart. We are using a single moving average, a technical indicator, which is a 20 SMA. Alright. Now here's the thing. Above the moving average, we buy. Below the moving average, we sell. Bigger the time frame, more consistent the trades. These are. Let's draw some resistance quickly. Some resistance and support levels. Just important levels for the sake of information. This one's from here. Okay. Swing low, and swing low. Alright. Now what do we see here? A strong sideways trading range. From how many days are we seeing this? Went up for past 14 days, 2 weeks. Up and down, up and down. And what's the approximated? So 500 points, or let's say averagely 400 points trading range, up or down. Not a good thing actually. Not a good thing at all. So now the question is, what's really going on? Let me draw a trend line for you first of all. We had this trend line. It broke. And what did we think? That it's going to continue trending towards the downside. The reason being is below the moving average and below the trend line, trend continuation toward the downside. Okay, but it was really a fake out. Okay, so these things are going to happen. So it was really a losing trade for me as well. Okay, that's point number 1. How can we really now begin trading? Okay, now what does this fake out means? It means the sellers, they failed to make to continue trending towards the downside, and the buyers took control and they're pushing, and the buyers broke above couple of days highs. You see that? 1, 2, 3, 4, 5, and 6. So previous 6 days, we're above the previous 6 days highs. Yeah, is that clear up till now? So we've got a couple of options. One is purely support and resistance trading. Okay, break of this resistance. You can put your trade 5 or 10 pips above it, or 5 or 10 ticks above it, or 5 or 10 points above it. 62.62. So 62.67 or 62.7. You can take a buy order. You can put a buy stop above it and keep trending towards the upside. First, one way. Second, below the support of 58.17, I still consider this as a fake out. Okay, below 58.17, you can put a sell stop and continue trending towards the downside. I don't like the sell idea because a lot of people would jump in from here. That's strategy number 1. Strategy number 2, above the moving average 59.66, you buy all the round numbers. 60 is your buy, 61 is your buy, 62 is your buy, 63 will be your buy, as long as you're above the moving average. Okay, and vice versa. Below 59.62, 59, 58, 57, 56 is your short sell entry. Hope it's clear up till here. Third strategy, above the moving average, a candle open would be your buy trade. Let's say this one is your candle open. So 100 point move. Below the moving average, a new candle open, you short sell, like this one. Short sell here. It's a 98 point move. Not a good one, because we want at least more than 150 points or 100 points a trade. But you get the idea. You'll make more money when the market is trending. Right? But the question is, what do we do for now? For now, this is the only thing. You look for buy opportunities. If you missed a buy here, okay, look for a pullback. Let the price come to this moving average. Put your buy. You can also third option or fourth option. Or you can't, not really counting. You can put your buy limit order here at this area at the moving average. So it's just considered as a pullback. If you miss a trade, always take a pullback. So this market should then continue trending towards the ups. You can exit at this resistance or at 62.62. Alright, that is only for now on crude oil. Okay, if you want to make it more messy, if you're an advanced trader, you can draw your Fibonacci levels. Okay, here are a couple of entries. Let the market pull back, come at this 50% to 61.8 zone. Okay, your moving average should be also around below 50, and when you see a candle closing within this zone above the moving average, you can take a buy trade. Just for the sake of information, you can add a drawing tool, a rectangle, so that you don't forget. Here, this is your 50% zone. Alright, this is our Fibonacci zone just to buy on a deep pullback. Got it? Now we also have a 4-hour chart. If you are looking for really lot of trades, yeah, you can trade the 4-hour chart as well. 4-hour chart is also good. I don't recommend going below 4 hours. 4-hour or daily, stick with that. You'll stay a long time. And please do not forget, risk management should be always 0.25% minimum per 100 pips. So this is an example for a 4-hour chart. This was your candle open, buy trade. You should be here. It's a 290 point move, you know, and you can move when this kind of stuff happens. Your stop loss can be, you can trail your stop loss at this low, or at even with the moving averages you can trail your stop loss. Okay, same as well when the market closes below the moving average, you take a short sell. Can you get it? Now you can take a risk, and if you're taking big risk, then I recommend you put some stop losses. So below the moving average, short sell, but the stop loss would be at the previous high. You see that? Recent previous high. Your stop loss would be here. So you're going up, and this is one way. Or let the candle close above the moving average to get out. Two options, two ways to get out. First option, above the recent candle, recent high, or second is if the candle closes above it. Alright, for this here, you have a buy here. Your stop loss would be here, but you got hit. You know, so you have to wait for another candle to open or pull back at the moving average, then make another decision. Right? But this is why I hate stop losses. You know. So if there was no stop loss and the candle closed below the 20 moving average, that would have been better, and you would be still in the game, and you would be making good pips. You would be still, yeah, you get the point, and you can exit at these resistances or whatever. So that's on the crude oil for now. Let us quickly do some gold. Gold is really sucky. It sucks. Okay, you have to be very careful with the gold. It's not giving clear pattern. I recommend you skip gold for now. I don't feel I like it. But if you want to really take a trade, just take a very small size. Okay, at the moving average. This is a buy. It's buy right now on gold. The candle opened above the 4-hour chart. Stop loss, you can put it below. This would be your stop loss. Okay, and your target should be around this high or this place or this place. This is where your targets are for gold. Okay, but try to trade it without stop loss. Take a small size and stretch for 1 week or 2 weeks. That's the plan on gold. Let's do the euro. Euro was good. Euro also the same idea. We closed above the moving average. This is your buy candle. This one. Okay. It went a couple of pips. 60 pips only, and then it stops you out here, so it sucks. But again, the new candle, it opened here. Big spike. 173 pips. So not a bad, it's not a bad strategy at all. Alright. And look at here as well. There was a buy opportunity. A candle opened. 58 pips, went against us. Maybe it closed, ended up in a loss when the candle closed. But again, when the candle closed, we got a short sell here. But let's calculate the loss. Here's the open. Here's the short sell. It's a 160 pips loss. But imagine if we short sell here, we're following the rules. We made that money back. 2100, or you can even recover your loss at 1600 and get out. Okay, again, buy opportunity here, loss. So hope it's clear. So it's a buy on euro, but if you have lost the buy opportunity, let the price pull back at the moving average. Okay, let's come here. Sorry, pull back. Maybe it'll chop for a while, you know, make some W pattern, and then you can continue trending towards the upside. That's for euro US dollar. British pound, same thing. It's a buy opportunity at this. You should take a buy, and if you've still missed the buy, let it pull back towards the moving average and then continue towards the upside. Your exit points. There are many ways to define exit points, but I sometimes like Fibonacci's. Alright. What you can do is take your fib levels. This can be applied on any. This can be applied anywhere. I'll do it from here up to down. So if this is our buy, this candle, we can exit at 50% retracement, which is about 150 pips. And I think it sucks. I want to be a little bit greedy. I want to probably get 61.8 level, or at this high, 369 pips. It will go definitely. Okay, so this is these are the targets for British pound. So hope the video helps. If you have any questions, feel free to ask me. This is Prince, and let's have a great trading week. Bye for now.